Welcome back. You're watching Big Deal, and we are discussing the various exit options for the venture capitalists. Let me begin with Pankaj on one important aspect. How do you see the IPO market for the startups at the current moment? Because there has been a pipeline being built, but of course, investor appetite is key over here, and the valuation expectation from the founder is another very important aspect and one of the eligibility criteria for the IPO to happen. And now, of course, SEBI's requirement of key performance indicators and the confusion around that. Putting all that together, the IPO market still looks like it's still struggling for the startup world.
So again, I think if you just look at the overall IPO market, obviously it's going great. Whether all the companies, whether it's consumer, industrial, financial services, in general, there's a lot of liquidity and investors want to put money. Having said that, I think a lot of technology companies are still on their way to go public, and not all of them are in the best in terms of preparedness to go public. Having said that, most of them are working towards going public in next couple of years. So my sense is even the 2024, you wouldn't see a lot of companies hitting the market. 2025, especially later part of 2025, you will see many tech companies going to the public market because they are working very hard on the whole presentation of KPIs, how they track their business, how they can actually be answerable to the investors, and how on consistent ongoing basis how they will track it. That is one. Second is last 1 or 2 years people have been focused on profitability and reasonable growth. So their businesses are very much are falling in place with respect to being ready to go public. And the third and the good thing about it is that most of the tech companies that had gone public and that saw volatility in their price actually have come back reasonably well, both on the business as well as on their price. So that is giving a lot of comfort to the investors to look forward to invest into newer companies. And the companies are also being encouraged to actually prepare to go towards public market. And there are a lot of new business models, especially on the SaaS side or fintech SaaS side, which have not been, have been seen by the Indian public market. I think some of those excellent companies are also preparing to go public. And I'm very excited that the next year would see some of these great companies approaching public markets. So I'm quite excited actually.
All right. So the IPO, pipeline is actually strong from the startup world. Just depends on the market acceptance as well as the market momentum of these companies to be taken for the listing. Now, Anand, when we talk about the various exit mechanisms, strategic buyouts have been one of the cornerstones for private equity exit in the past. Now, that is the one which gives the significant return to the erstwhile investor as well, and is considered to be a good exit. Where do we stand when it comes to M&A in the startup world, and especially from the bigger strategics now that we are in an omni-channel world? So is that a possibility, and how are the trends there?
So Nisha, in the strategics, we have rarely seen global strategics do any deal in India, right? I mean, very few deals, particularly like Flipkart, Walmart happened. But those deals will be very far and few. The second category of potential buyers and strategics would be Indian conglomerates. They don't want to buy juice from the market, like you said. They'd rather have their own mixer grinder and juicer at home, and it's make versus buy. If at all the conglomerates have bought anything, it's more like bottom fishing or buying buying only for sort of some skill, not necessarily buying revenue or buying leadership. The third category, which I'm hoping will emerge, is as some of the startups we spoke about, as they go on to public markets, they become liquid with their stock. I'm hoping that those will drive some of the M&A. So, for example, Zomato buying Blinkit was one of those kind of deals. And I'd say the only expectation or hope that we have in this market would be from listed startups, larger startups buying smaller startups. I think that is the most likely scenario.
Yes.
The other two categories, the global buyers or Indian conglomerates, of course, Tata's have done a few good deals like Big Basket, etc., and Cure Foods, Cure Fit. But I think besides that, we'll probably see one or two deals every 2 years, but that's about it. We're not expecting much there.
So big strategics and conglomerates are the biggest value pickers, Anand. And you have the startups have to come with something that is so unique that they can't build. So that's another catch here. Now, Ashish, final word to you. Is there a problem in founders merging with each other? Why has consolidation not taken place in the startup world, even if it went through different difficult cycles for the last few years?
So there is no problem in that happening. The only condition is that when two heavily or overvalued companies are going to get subsumed as one, or one heavy overpriced company acquires another company and attributes a overprice onto it, it doesn't help anybody's cause. Cap tables were well funded. It is the first time in the ecosystem that we have had a phase of about 24 to 30 months of stress where funding rounds have not happened. So you might see a little bit of it because until now, investors had the dry powder to go out there and say, we have the winner on our cap, we are on the winner's cap table, let's keep it on. So that is what will push out the outcome. With valuations taking a hit, with liquidity drying up, a lot of those options also will emerge. But at the end of the day, the profitability is going to be the key factor, and the ability of the companies to run profitable and show a site of listing, which is ultimate holy grail. No other mode of exit is really viable because you can't get 70% of the cap table exited by way of a buyout. Or someday somebody has to go and tap the public markets.
Yes.
To that extent, we do feel listing a little earlier than later is the way it should go. We don't need to wait for companies to get 20,000 crores of market cap. It's fine to hit them at 4,000-5,000 crores and let them grow at 25-30% CAGR. Enough companies have done that. Why not?
All right. So IPO market is one of the holy grail for most of the startups and the investors eyeing out for that. And I would like to re-emphasize that the current, secondary exits are also happening, and the new value buyers who are coming in are also eyeing that IPO market for further monetization or exit opportunities. Thank you so much, Anand, Ashish, as well as Pankaj, for joining in and giving us more details and very candid views on how the exit mechanism is looking for the VC world. Thanks so much for joining us, to all our viewers as well.